Okay, let's get started. Welcome everybody to another Pepperstone webinar conducted by FX Evolution. Tonight we're going to be looking at two simple scalping strategies to trade the market opens. And as always, I'm joined by Tyrone Abella.
Hi everyone, and welcome to tonight's edition. Scalping is very, very popular. A lot of people love it. And we actually love talking about it as well, because it is where the market actually gets exciting. So hopefully everybody will get some good questions in tonight. Fire them away as we go. We'll do our best to answer them, and we'll get stuck into it.
A lot of people don't realize this, but like everybody, we really started on the scalping timeframes. So we started on those 1 minute, 5 minute, 15 minutes. We've kind of moved from there a little bit now, but that is where we really did start. We put in a lot of chart time and we put in a lot of effort. So there's many different strategies that we used over the years. And tonight we're going to be looking at just a few around opens, which I think will help a lot of our traders in London and also traders in the Asian area, because they can really take advantage of the London Open kind of concepts and trading strategies, which is great. So just to get started, we have a risk warning. The information provided in these videos has been produced by a third party and does not reflect the opinion of Pepperstone. The information has been provided without any alteration or verification. Okay, Ty, so what we're going to be covering today is we're going to be taking a look at the best timeframes for using scalping strategies. We'll be looking at how to build a scalping system on a points-based approach, something that many of you that have come to a lot of our webinars would know we're all about, building a business strategy for anything you're doing, whether it's scalping, swing trading, long-term trading, anything. Always treat it like a business. And then we're also going to be taking a look at what market conditions to look out for before using scalping strategy. And I think this cannot be overemphasized. You must do your research before getting involved in the market scalping, because anybody out there that's ever traded, and if you were trading, let's say over actually this January period, Tyrone, what happened to the yen?
Yeah, we had excuse me, a flash crash.
He's lost his voice, it was so bad.
Yeah, we had a flash crash actually, and happened in the space of a couple of minutes, and yeah, it affected several pairs. It was really interesting.
Yeah, so the flash crash is pretty unique. It doesn't usually happen, but sometimes they can take advantage of very low liquidity in the market, which happens over that Christmas break. And what ends up happening is there's no volume. So they start pushing it in a direction and there's just no orders for the other side. One thing we don't see in trading Forex as much as we don't see the buys and the sells. We just know we can buy and sell. So just remember, time of year can also play part of things to do with scalping. We need to be careful. We need to have our stop losses in place. And that goes for things like the tsunami in Japan that really knocked it around as well. It does happen, guys. So always place your stop losses.
Yeah, and generally speaking, we always find that that time of year is volatile because of the liquidity anyway. So we're always very skeptical as to what may or may not happen. But yeah, that said, it does often provide really good scalping opportunities as well, because when the market's moving quickly, you can get in and out of your trades quite quickly. So yeah, we'll look at a couple of those examples tonight as well.
Okay, so what is scalping? So for anybody out there, scalping is a trading style specializing in taking profits on small price changes. So we're really working on those 5 minute, 15 minute, 30 minute, 1 hour charts. It's time intensive, so it's important to know that, and also it's very chart intensive. So a lot of scalpers will often have multiple screens on their computers so they can take in as much information as possible. One thing we used to have is, and we still do have, is we've split it to 2 walls. We used to have a 12 screen wall and we just stand there and look for scalp opportunities. So that was a bit extreme, but you can get to that point. The more transactions,
breaking it down to 6 screens now. We've got 3 6-screen walls instead.
It burnt my eyes, to be honest. Like one thing out there, guys, make sure you take care of your eyes when you've got a lot of screens, because 12 screens was too much. So we're going to have a lot more transactions when scalping, but often there'll be higher fluctuations in account balances. And this is because you're transacting so often, you might have slightly less, success. So your percentage of success will be slightly less because you're taking so many trades, but overall, you obviously can make a lot more money because you're really putting through a lot of transactions. and you really need those strict entry and exit criteria. I don't think there's anything else to really say about scalping, Ty. That's the main stuff we like doing.
That is the nuts and bolts of it, yeah.
Before we go through this primary versus supplementary style, let's just jump straight into the market, which is where we would like to be, and talk about something that happened last week on the pound US dollar. I was actually mentioning this coming into the webinar that we run personally on our side, FX Evolution, but this particular candle, I really want to highlight that. So let me actually get the highlighter tool out and highlight this candle here. Now, the reason I want to do this is because if we take a look at what time this candle happened, it happened just before the London Open. And this is the time that a lot of scalpers want to get involved. In fact, London Opens around 8 a.m. in Australia, in London, and it varies from 5 to 7 p.m. in Australian time, but you can always just look it up and have a look at what time is it in London. If it's 8 a.m., then that's the Open. But you actually want to be involved in the market around an hour earlier, maybe half an hour earlier, but definitely earlier than the Open, because a lot of setup candles happen. And this is on a 4 hour. So you may be saying, Tom, are you crazy? We're on a 15-minute time frame. We don't want to be trading a 4 hour when we're scalping. But the reason we want to see this is many people will see this level of support. Okay, multiple touches, one touch here, two touches here, and the third touch. This third touch is followed up by an incredibly bearish rejection candle. And that happens exactly 1 hour before, or around 1 hour before, the London Open. So then we see a bit of nothingness kind of happen, and then we see that quick, sharp breakthrough. So if we break this down, let me get rid of these highlights, or at least just jump down to the smaller time frames. And take a look at this line over here. Okay, oh, here it is. So here's what happens with the break. So as a trader, if we see a break of really strong support, which we maybe have noticed on a 1 hour, 4 hour, and this is the support line here, when this break happens, we can start to scalp the market. So the beauty of this is it's coming into the Open, and that's when that big volume starts up. And London's known for some of its biggest volume, isn't it, Ty?
Yeah, definitely. It is one of the times when if you're going to get bang for your buck, it's generally at the Open. Not necessarily the direction it's always going to go, but you will get some sort of action most of the time. In fact, look, there's been a lot of scalping strategies built around the fact that the first 1 hour of the London Open is generally a really good one to trade, especially if you're trading the break of the high and the low of the previous candle. But again, you've got to do that with caution, because you've got to understand that a lot of people associate the London Open with a fake out, which generally does happen. So
what did we see here as well? It was such a fake out. This is a 15-minute chart here, guys. And what we saw is we saw that break candle, which is this one here. And then the great thing is if we place a trade like this, let's say short, we know where to place our stop loss. It's going to be above the last high, which is up here. So we're not going to have a very large stop loss. And then we can see that sharp move all the way down. But notice also by the end of that session, because these are 15-minute candles, it's fully reversed. And this is time and time again, it happens in London. You see the breakout happens. You need to apply the scalping strategy to these kind of breaks, because they don't always go 200, 300 pips. They go this kind of distance. So if we have a look, this distance here was about 70. If we got involved in the trade at this break and this close, we'd need about a 25 pip stop, which is pretty symptomatic of a 15-minute chart. And our possibility of total profit would be 60. But what we would do is we'd use an hour chart, have a look back through time and say, okay, well, where's this most likely going to stop? And it's probably going to stop somewhere in this range over here based on what we can previously see.
And even in general terms, when you're scalping, if you can get scalping rules as a general guide, you're going to get 1-to-1, 2-to-1 trades. You're very rarely going to get better than 1, 2, or 3-to-1. 3-to-1 is probably at an extreme for a scalping trade. So you can really break it down to, if your stop losses are going to be 25 pips, generally speaking, if you can get 50 out of that, you've probably done well, especially at a London Open. So we're not looking for a trend reversal here. We're just looking for those short, sharp moves. And generally, always work your take profit off your stop loss. So yeah, one of the biggest mistakes that people make, we'll quickly mention it, is they determine what contract size they want to trade, and they'll put their stop loss in line with that, thinking they're doing the right risk management. You can't do that. You've got to put your stop loss where it needs to be, where in that case it was about 25 pips, and then you work out your take profits from there, and your contract sizes from there. So always adjust your risk to where the stop loss needs to be, and not the other way around. Very, very important.
Don't just say 2 lots. I'm trading 2 lots every time. That's not the way to win, is it, Ty?
No, it's certainly not the way to win. Well, I guess it depends. You can trade 2 lots if you've got a couple of $100,000 in your account and you're only risking 1%. Go right ahead. But if you only got $1,000 in your account and you're trading 2 lots, you're probably not using the right risk management. In fact, you definitely are not.
Yeah, we hear it all the time. We were there. We know what that feels like. So make sure always always have a fixed risk and then adjust your contract sizes. And actually, if anyone doesn't have it, make sure you get maybe Pepperstone, the guys at Pepperstone, to provide you, if you use MetaTrader 4, the mini terminal. And this is part of the advanced trading tools, because you can actually put this on the chart and then you can basically figure out the contract size. It does it for you. So it really simplifies that process. We used to have to use
If you haven't got it, you get onto your account manager at Pepperstone and they'll help you download it and they help you install it. It is a fantastic tool because you literally cannot get it wrong. And what we also find too, and it may confuse especially some of the beginning traders out there, that even lot sizes, when they rotate from currency pairs to commodities to indices, lot sizes are not all equal. So you're not risking the same amount by putting, say, a 1 contract or a half a contract. So these smart tools actually adjust it for you no matter what instrument you're trading. So they're very, very useful, and they really do save you from making sometimes some pretty ordinary mistakes. Because quite often what people will do is they'll place a trade, and even if it's wrong and they see that they've done the wrong contract size, they will refuse to take that little loss. They'll say, you know what, I'll just wait for it to go green and then I'll close it. And Murphy's Law will have it on you that will be the one time that you'll see that big rejection candle that we showed you earlier. And all of a sudden your account will go from 5,000 to 3,000 in the blink of an eye. And you'll be wondering how the hell did that happen? So if you ever do identify a mistake on a lot size, close it instantly. Don't wait for it to try and go into the green. Just copy it down and write it down as one you've got to get back, because it can often prove disastrous if if Murphy's Law kicks in, which it generally does.
So just to reiterate, guys, the reason this trade was so great was because we recognized the level, which is this strong support, and this is on a larger time frame. And this is actually what you want to do a lot of the time with scalps. You recognize a candle like this, massive rejection candle, and then you recognize the time. And if the time is before a London session or before the New York session, those 2 big session opens, then when those break, they break aggressively and you can get involved in those scalps. So always remember, it's all about checking out the larger time frames to get a bit of a bias. And then what you do from there is you effectively bring in the 15-minute chart and the other time frames. So really, really good trade there. Not too bad at all.
Tom, we've got a couple of questions. I've actually got 3 questions here, all relating to the same thing. Can we just do a very quick demo on the mini terminal? Can we quickly just put it up for some people to see how it does work? Because it is vitally important, especially when you're in a scalping situation. You're quite often entering quickly, so you don't really have a lot of time to be thinking about it. So hopefully, if the internet actually picks up some speed, we'll get it up and we'll give you a very quick look at how it looks like.
Sure, guys. So here's the mini terminal as you first see it. Now, this isn't actually the window you want to use. You want to basically jump into this little yellow box and click that. And then that will bring up this little new order template. So from here, you can basically select whether you want to buy, sell, place limits, stops, all these different types of templates. You can even save your own if you feel like it. And then it comes up like I've got one here that says Pepperstone. We then can select a percentage of equity, balance, or cash risk. So I like cash risk, or percentage of equity or balance is really great as well. So let's say we want to risk $100. We could do that. We could then place the stop loss. So let's say the stop loss was 25 pips, similar to that pound US dollar trade. We would be looking at selling them. And then we'd put in the take profit, which might have been, let's say, 45 pips. So if that's what we did, place order and it will enter. I'm not going to do it because it will literally place an order in this account, but it's as easy as that. And it's great because it can actually handle your balance as a percentage.
Yeah,
So
so
you can say
generally,
1%.
so you can really suit yourself. Like you can do it manually if you've got a $10,000 account and you're going to risk $100 to make 1%, you can enter that as a cash risk. Or if you wanted to do it automatically for you and your balance is not a round number, so it takes a little bit more working out, just make it a percentage of equity, type in 1%, and your lot size is very, very close. It's not exactly to the absolute cent sometimes, but it's very, very close. So you'll be well pleased with the results you'll get from it. So I encourage everybody to use it because it's a very, very handy tool.
We might use it sometime in the webinars moving forward. This account's just one of our ones that we use for testing in the webinars, but I'll get some demo or something set up so we can do it next time. All right, well, let's have a quick look at the other currency pairs and talk about some kind of session opens and close kind of trades. So one thing I wanted to also reiterate is this is the US dollar yen tonight. So we can see here that I've drawn this big red line through the point when the London session actually opened, and you can see that big breakout happen. Now this isn't very large, of course it's only about 7-8 pips, but what it is doing is it's breaking resistance into the overall trend. So again, if we just go back to our 4-hour, I think everyone can probably see that recently the US dollar yen has broken past that 110 and it's moving on the up. Okay, so if we want to scalp this kind of thing, then what we can do is we can jump into the 15-minute or we can jump into the 5-minute or any of those kind of time frames, and we look for the session highs and the session lows. And sometimes the market will be pushing towards one of those directions. So if it's pushing in the direction, in this case, the session high, and then it breaks coming into the first hour of London, often that can be a very strong kind of trade. So that's the one we want to be doing and looking at. And then what we want to do is find reasons around that to potentially get involved. So whether that's extra candle confirmation, stronger resistance breaks, maybe there's strong RSI increasing or MACD increasing, those kind of things. We can add them into our trading rep, but the general structure is figure out the session highs and lows, look for the resistance and the support, and then wait until the first hour of the hour before London open, and then start to look and say, well, is there any points of resistance or support that are going to be broken? And if there are, start to look at trades around that on the 15-minute, 5-minute timeframes. It's very, very powerful stuff, and it moves quickly and potentially 10 to 20 pips very quickly.
Yeah, and you're going to get your 10 or 20 pips in the London Open. Look, probably a common question people are asking is, is it only London Open that you can really get this sort of action? Look, the Asian Open does have a little bit of action as well, but you just got to be prepared that the moves are not going to be quite as big. When you're scalping in that realm, you're really, really sort of isolating maybe 10 or 15 pips, maybe even sometimes less. And that is scalping to, in its true form, really going for very, very short and sharp trades. We personally don't do that because we're looking probably for a 15 to 25 sort of minimum really. And the thing with scalping too, it's really a time intensive thing. You've got to be prepared to put the time in and be there at the ready. You can't really leave your charts for very long in a scalping type environment because you can miss it especially on the smaller time frames. You can miss your trades very, very quickly. So it really comes down to the sort of the times that you've got. But London Open, especially for people in Australia, a lot of people find that they're finishing work or close to finishing work. So it's a good time for them to trade. The other good opportunity that you can get, it's not as volatile as the London Open, but it certainly does work, is the New York Open. For those of you who are night owls or from overseas who can actually trade the New York Open, you do get similar results. But the one thing about the New York Open is we've found that it does trend a lot more once it does actually break out and do something. So if it does break to a particular direction, you get a lot less fake outs we find in the New York Opens than you do in the London Opens. The fake out's not really there. And I think a lot of that is attributable to the fact that when the New York market does open, the New York market is it's still in conflict with London, but when London actually does close, there's another little volatile period in the middle of the New York session, which is around their lunchtime, when actually London closes, European markets have all closed, and the New York market is the only one open. And that we found in the past has been the nicest trading environment of the 24-hour period that you can look at, because it's it's one of the major markets in the world. It's the only one that's open, and there isn't a lot of I guess intercontinental conflict, I like to call it, where people are trying to push markets one way or the other. So if you're looking for that perfect, probably 3-hour period of trading where technical analysis is at its purest and trends actually really do mean something, it's that last 3 or 4 hours of the New York session that is prime for good entries. And
Tyron and I used to do the split shift on that. We'd get up at 3 a.m. in the morning. It was pretty bad, but that's what we did do, and that was a time. It wasn't big moves though. We need to reiterate that's scalping at its finest. It is 10, 15 pip kind of moves, because nothing
very
happened
quickly
in the market back then. Yeah,
that's right.
All right, so I just wanted to quickly bring up a few other kind of things that are going on. So just with the odd, again, this isn't necessarily happening right now, but I'll grab the highlighter tool out, and I'll just highlight this point here, so this resistance point. Now, I had this line through here because you'll notice it says 2 o'clock. Now, that's around Asian Open for us. So the Asian Open will happen around that period of time, and you can see that the market was trying to break past its previous level of resistance. And you will notice that the Australian dollar, US dollar, often likes to break its key resistance support lines at around that period of time, whereas something like a pound US dollar, euro US dollar, those US dollar Swiss, they will break into the London Open. So they'll often be at this point just before an open, and then they'll break through during that open. So just want to reiterate this one, because another good little trade from this morning where the clear resistance is broken, we can get involved in this for a scalp. Wouldn't probably take it all the way to the top, but we might take it through this zone here, and that would be a very nice scalp. And you can see that's what a lot of people did, because if we notice this candle, it broke through and then went quickly up here and rejected. So if we go to a 5-minute chart, look at what actually happened. So it broke through very violently, and sometimes this does happen. Usually it's a bit of news, but sometimes it just technically breaks through as well. So
and it came back and really it just about retested the break zone, actually, like when it came back on the 5-minute chart. You could have picked it up
in the roll reversal.
You could have picked it up again, because quite often we do find that these little moves do continue on. They're only a small amount of pips. Again, it really comes down to your expectation of what you're wanting to do. Actually, I have had another question here that I'm just going to quickly bring up. Asian Open is it's a little bit different to, I guess, the London Open, because London's like basically one country. Asian Open can be a couple of different times, really, because we've got the Australian Open, we've got the China market opening, we've got the Japanese market opening, all kind of different times. So we don't get a clear-cut Asian Open to say that every single market opens at the same time. So it's really picking up the one that gets the best move and bang for your buck, if you like. We generally like to stick to our stock market open. We find that we call that our Asian Open, because that's when our market opens. And it's the one that we like to trade because we understand why it's happening. But yeah, it's just really working out which country is opening at what particular time for an Asian Open.
If you are in the scalping kind of method of using role reversal, and just quickly, I know we go kind of fast in these because we've done this stuff before in the previous webinars, which you can have a look at, but role reversals where resistance becomes support, what you'll notice is that sometimes you can get these engulfing candles. And when you get an engulfing candle coming off the role reversal, that's a really good go signal for your scalp. And it makes it simple because you've already identified your area, you already know it's around an opening of the market. And then what you do is you can place your buy, and then you place your stop loss below this particular candle here. And what that helps you do is you get a very small, tight stop loss, and you know that at least your take profit can be at least into the highs. So you're getting that 1-to-1, maybe 1.5 or 2-to-1, very quick, very sharp. And you just have to be very careful to make sure that these candles are engulfing, because that is the strength. It's showing that bullish strength or bearish strength in the market. Another top tip that Ty and I have used over the years is that when you're actually placing the order, say you see this candle, what you might want to do, and it does give up a pip or two sometimes, is place an order just above the wick here. And the reason you do that is because what then happens, I've lost it completely, there you go. What then happens is you make sure that the next candle is a higher high or a lower low. And that basically means there's a continuation of the market in that direction. And that's what we again want to see. So it sounds counterintuitive because you're giving up a couple of pips, but I'm sure we've all been there and we've entered here and then it's just gone all the way back on us. And we go, why, how the hell did that happen? But it's because you're not waiting for the extra confirmation.
Yeah. Now, the thing with scalping too is what you can get if you haven't got a predefined resistance zone that you're longing into, or a support zone if you're actually going short. Candle and price action is really, really important to actually show you what the market's actually doing and when it is running out of steam, especially in the scalping market. So we can see here, we can keep talking about this move. We can see at around, well, it would have been about the 6 o'clock candle. We can see that the first sign that this trend, or this little mini breakout trend, was starting to weaken was when it started to make a series of lower highs and lower lows. Now, even though they're only very small, they're only just a little bit lower each time. As you can see, each time the little peaks that are making, the candles are rejecting every single time it gets there. So you can see you've had basically 3 or 4 series of lower highs and lower lows in a row there on a 5-minute chart, but you haven't given up a lot of your moves. So yeah, if you missed the first one, you certainly couldn't have missed the second, and if you've missed the third, well, you're not paying attention. But you've basically seen most of your gains actually held. So the market's given you time to get out well before it actually started to fall and basically retrace all the way back to where you entered. So it's really, really important, if you haven't got a resistance zone to aim for, to really watch what the candlesticks and the candle patterns are doing, because the price action is absolute key on the smaller time frames when you're scalping small amounts.
Yep, it's the way you really need to do it. You really need to be able to recognize trends using price action. Okay, we'll just jump straight back into the slides quickly because we want to kind of overview a bit of a points-based system so we can bring it back a little bit. Just want to quickly start with scalping as a primary versus supplementary style. So it's just really important that there is a way of building your scalping into an overall style where you're doing other things as well. So a lot of people become supplementary style scalpers, where they might use maybe 2 to 3 nights of the week to recognize favorable market conditions and adapt their trading style to take advantage of those situations. And then the rest of the time, they might like to be a swing trader or longer term trader. So it really gives you that kind of diversified portfolio of trades, if you'd like to say it. We always want to know the market conditions as well. So we will choose time frames in terms of things like the 5-minute, 15-minute, 30-minute, 1 hour and 4 hour more to try to prove the support resistance zones. And if the market is range bound coming into something like a session open, then of course we will be looking for breaks of that range, because I wouldn't be shorting against that, but usually the break of that range does happen in those session opens. And it's really important to spend time learning the way that the market moves. So once you've watched 10, 15 London Opens, it acts in a certain way. And it's just something like you learn to trade a pound or the odd or gold. They all kind of act a little bit differently at different times of the day. So you become you're more used to that and an expert at that. So it's really important to try to do that. I'll leave this channeling stuff for another day. I think most people here are probably aware of what a channel is. If you don't know what a channel pattern is, you really need to go and find that out. Just search it into Google. Very important to understand channel patterns and range-bound markets and their take profit zones. Same with double bottoms and double tops, another favorite of ours, scalping into market opens. And then, of course, popular moving averages. So somebody asked this in the chat before. We use EMAs and SMAs. So we actually have SMAs most of the time, but I've got some EMAs down here. The SMAs are the same. So 200, 50 or 55, 20, 8, and 5. are what
This
we use.
particular one uses our, the EMA system, but what we often do is our 200 is an SMA, and we use EMAs for the 50 and the 20. So we like to keep things simple, and we always like to, on our charts, keep the color schemes the same. So no matter what time frame or pair you're looking at, you always know which moving average is what. But for anybody who really wants to follow exactly what we do on our charts, our 200 SMA is the green one. Our 50 EMA is the blue one, and our 20 EMA is the red one. So red cars go faster than every other car, so we know that the red one's always going to be the 20. Of course, we know what the moving averages are by number because obviously they're quicker than the others, but it's a really, really quick reference point. But I encourage people to try and use the same colors right across their trading style so they have no confusion whatsoever. And in a glance, you'll know exactly which moving averages you're looking at and why they're doing what they're doing. It's really important.
Couple of quick things as well, or tips that we like to use. Always enter based on confirmation, not on gut feeling. So if you think it's going to break coming into the session, don't just trade it. Wait till it breaks. You will have more success. Just like that engulfing candle before, you will have more success when you wait for the engulfing candle to happen. We also don't want to break even our trades necessarily with fixed pip amounts. Each trade will have a slightly different stop loss and slightly different take profit. So what you want to do instead is break even using a percentage. So let's say we had a 20 pip take profit and we wanted to break even at, let's say, 60% of the trade. We would work that out into pips and then use that as our break even point. And it would always be 60%. And that keeps it really stable and keeps us more statistically relevant, and I guess also we have higher chance of success longer term with our trading system.
We've got to really remember that scalping is a numbers game, so we really have to stay in that game. We want to be mitigating our risk, as soon as we can, really. So what we're trying to do there by breaking even by a percentage-based system, we're really increasing the chances of actually limiting our losses more than increasing our gains. So because what you're going to find a lot of time is you're going to break even and you're going to say, oh wow, that I should have just left it alone and not done it. But what you'll find in the long run, especially when something is a numbers game like scalping is, and you can often place many trades in an evening if that's what you're doing and analyzing it properly, the numbers will work out for you in the long run. They always do. We've done a lot of testing to really show that, and it's always as a lot of popular sayings go around the world, money in your pocket is money that can't be given back. So that's what a break even is really. You're locking in maybe potential a little bit of gain. A lot of times we like to do a break even that actually incorporates the spread. So you give yourself a couple of pips as a backup. So even if it does come and break even, you're not even going to be down the spread or anything like that. But use them because in a numbers environment where you're putting high frequency trades on, you do want to protect yourself.
Another one, role reversal, mentioned it before, where in this case it's where resistance becomes support. Let's say this was the London Open. The London Open broke. We came in here and we went, damn, we missed it. What we can do is wait for the back end of the session. So of course, let's just say this is a 15-minute chart. And then the back of the session, it comes back down and tests that role reversal zone and we can pick it up. So the real two trading strategies that you should be taking out today is the break itself and the role reversal into the break. There is, of course, other trading strategies, but these two, you'll have pretty high success with them if you learn how to recognize the market in terms of those breaks and role reversals. Just a few things here. I'll leave this screen on. Try to aim for 1-to-1 or better trades. A lot of people go under 1-to-1 with scalping. Massive mistake. You cannot continue to be profitable doing that. Sometimes good-looking trades will not always meet your criteria, and that just comes down to being picky, and that also comes down to practicing discipline.
Yeah, and just to touch on that, I'll just go one step further on that one. When we talk about 1-to-1 trades and making sure you maintain your discipline, the problem with scalping and what a lot of people associate scalping with is a mentality where it's a little bit like a casino where you're just pressing buttons randomly. You still actually have to maintain absolute discipline in your scalping strategies, even if you are high frequency trading. So by placing a lot of trades, it doesn't give you open license to be undisciplined and just enter because you have a gut feeling. You still want to be looking for those setups, those role reversals and breakouts. It's a really, really important part of what you're trying to achieve. And the 1-to-1, the reason why we say don't go under 1-to-1 under any circumstances is because scalping, like I said earlier, is a high frequency numbers game. And you might find that your winning percentage is not going to be anywhere near as good as a long-term trading strategy where you might be upwards of 70 to 80% win-loss ratio. Scalping can often be around that 50 or 60%. So you certainly don't want your winners to be smaller than your losers under any circumstances. So very important, maintain discipline and go for your one-to-one at the very, very least.
All right, so let's build a quick system based on our entry criteria. So what we're going to be taking a look at here is when the market is broken through, let's say in the first half an hour of London, and it's come back and it's retraced back to our role reversal point. So what we can do there is we can now start to formulate a plan. So are we going to have support resistance at a point like that? Yes, we are, because the resistance or the support's been broken and it's coming back and retesting that zone. Then we might also have candle confirmation. So one of the things we looked at on that Australian dollar on the 5 minute was an engulfing candle. So if we see an engulfing candle coming off that point, very strong. Let's give it 25 points. And the last one is Fibonacci retracements. Cannot be underestimated how great these are when it comes to breaks of zones, especially coming into markets. Often a market will break, go 10 pips, come back that 10 pips, and then bounce completely off, 40, 50 pips in the space of an hour and a half. So Fibonacci retracements, look for 38 twos and 50s. Very, very important.
A lot of people knock Fibonacci retracements because they are so subjective in where you can draw them, because you can basically draw a Fibonacci on anything. But what we found in particular in scalping strategies is that everybody loves them and everybody uses them. And the fact that there are so many different types drawn, I mean, even in this example here, we could draw 3 different Fibonacci retracements on that last move there. We've got one there, we've got one of the next swing. But what you'll often find is that there's so many people using them that even if they're drawing them in different areas or doing different swings, you'll find that a 38-2 will line up with a 50 of another swing. And in scalping strategies, they're extraordinarily powerful. They really are, because there's a lot of people doing it and a lot of people really believe in it. And because of that, it turns into a self-fulfilling prophecy that the markets do bounce off it. So even though they are subjective and people can draw them, basically 3 different ways on the same chart, quite often the zones do end up very, very similar. So you'll get that bounce. And if you couple that with a place of support and resistance or a role reversal, even better, the movements can be quite explosive. Yeah, very fun to watch. And they're a good tool. So we definitely encourage you to use those on those smaller time frames. And also, probably if I've got time here, I'll just quickly talk about the stochastic indicator. In a sideways market where, if it's not really breaking out, or if it does just break out and the stochastics is agreeing, we've got to remember that, the stochastics on the short-term time frames do adjust to the time frame that you're looking at. So quite often, when they are oversold and overbought on the smaller time frames, you will get that move. So if you get an overbought or an oversold zone in conjunction with a role reversal area, which is often what you'll get, that's when you'll have that extra confirmation from a stochastic. So even though they're not really a great trend following indicator, for the purpose of scalping and small breakouts, they can be actually very, very useful, because for those of you who don't know, they measure the closing price against the highs and the lows of the last 14 periods. Now on a 5-minute chart, of course, you're only talking about probably under an hour. So it is very, very reactive to what the market is doing. So they do work exceptionally well on the smaller time frame. So certainly keep that in mind.
For a lot of people that are asking, this webinar is being recorded and it should be posted up on the YouTube channel and on, I believe, the Pepperstone website. So just ask your account manager as well. They'll be able to provide you a link over the next 24 to 48 hours, because we are covering a lot. We know that, but we have to, because many people that come to these webinars, they've done some parts. It's hard for us to tailor it. What we're trying to do is get through the break concept and the timing concept tonight. And then all the other things are great as well if you bring them in.
And we definitely encourage, look, they do say on that channel, so we encourage anyone who hasn't seen our webinars before, or not all of them, we certainly encourage you to go back and actually check them out, because it will link with a lot of what we've done tonight. So a lot of what we've done tonight will actually make sense to you, because we've explained different components of it far more rigorously in previous webinars. So certainly get in there and have a look at some of the back catalogue.
And before we go on to the next point, speaking of which, we do run a weekly webinar at our website, FX Evolution. I guess we'll provide links if anyone's interested in coming along tomorrow or next week. because we do go through a lot of this stuff. We do more of the live market, less of the theory in those webinars. But the reason why we want to cover as much as we can tonight is because we do have people coming from all different types of learning backgrounds. So here we've got this Fibonacci. We can see the 38.2 and the 50 fib, and we can see that it's pulled back into kind of this role reversal point, and now we're seeing this 15 minutes, which will close in 5 minutes, and whether that might be an engulf or not, it could add a little bit of strength. Now, this is by no means an incredibly strong trade like that pound, but you can see that at least it is a point where previously it found it tough to get past, and then it's found it tough to get past again. And if we go to a larger time frame, which is our proofing time frame, the 4 hour in this case, we can see that the trend is up. Another thing that you might be able to notice is sometimes you'll see like a break, like this really key break here at 110. And when you see that, and you know that maybe the take profit should be up here, maybe at 111, at least on your 4 hour analysis, why not start looking for scalp breaks on the smaller time frames in that direction of trend? A lot of people always say to us, oh, don't look at the 4 hour. But if you're looking at the 4 hour daily, you get a bias, then you can get into the smaller time frames and just follow that trend. Every time it breaks, when it comes back and retests, does it meet your criteria? Does it meet your 75 points out of 100? Does it meet whatever you're looking for? If it does, take it in the direction of trend. Because in the direction of trend, they say trend is your friend, and that's because you will do better if you follow the longer term trends, even with the scalping. Anything else you want to say about that one, Ty?
No, I think, look, we've talked the USD yen to death over the last week or so. It's been an exciting trade for us, and the fact that it's a positive carry is even better. Not that that really matters in a scalping strategy, but you're right when you're talking about looking at a bias for your long to medium term direction. If you're scalping in that direction, it's always going to just pay off. Just a little bit more than a scalping in a counter trend situation. So it's always better to know what you're looking at. Look, there's no point looking at a daily or a weekly time frame if you're trading a 5 minute or a 15-minute chart. But the 1 hour and the 4 hour directions are certainly influential because the moves just are definitely bigger. The flow on effect and the momentum of the market is in your medium term direction. So certainly one to look out for. And don't underestimate, probably if I was going to add anything else, don't underestimate the speed of the moving averages when you are looking at your scalping strategies. Because on a 5 minute and a 15 minute, a lot of people think that moving averages don't really mean as much. Look, they carry a lot less weight than they do, of course, in the bigger time frames. But you've got to remember that you're doing this relative to what you're expecting out of the market. So if you're after a 15 pip move or a 20 pip move from a scalp, if you've got an accelerating 20 moving average on a 5 minute time frame, that is actually far more significant than a moving average just moving up on a daily in your direction, because you're getting the information that's happened in the last 20 periods on a 5 minute chart, as opposed to the last 20 periods on a daily chart or a 4 hour, which has probably little bearing on what's going to happen in the next hour or two.
Okay, so I'd like to hand it over to, I guess, some of the questions in the room. If anyone has a question they'd like answered, we'll try to do that over the next couple of minutes. And yeah, I guess that will probably end tonight's webinar. We might run a part 2 on this as well, where we might do it a bit more advanced and then try to really get involved in the London session, because the great thing about the time we run this webinar is it is literally the London session. But if anyone has any questions, put them in the chat room right now and we'll answer them.
Yeah, and also probably just on a side note too, if anybody has any ideas that you'd like us to cover, like what we like to do in these webinars is actually do teaching in the live markets and actually really analyze what is actually happening in the live markets while we put forward our our education process as well, so you learn while you're trading. But if there's anything that people would like, certainly when you do the survey at the end, pop it in the comments section and we'll try and cover it as best we can. If we haven't already in a previous webinar, we'll certainly try to incorporate it into future ones, because really these webinars are all about the teaching process and giving you guys an advantage while learning on a live market.
Okay, here's a good one just about scalping. Is your win-loss percentage lower on scalps than longer term trades? So yes, you will have a slightly lower win-loss percentage on scalps. The nature of scalping is that you are trading into things like news, and that brings up a good point. Always check your calendars before you scalp. If you see red news, and I don't necessarily mean CPI, that will move quite a lot as well, but if you see things like the Fed non-farm payrolls, do not scalp into Fed non-farm payrolls. You will get ripped up. And the reason that is because non-farm payrolls is a very difficult jobs figure for the market to interpret. And I encourage anyone that's into scalping, please go watch a time when the non-farm payrolls comes out and see how the market interacts with it, because it will go up 60, 70 pips. It will come back 60 to 70 pips. Then it will go in the other direction and then potentially completely reverse again in the same night. So non-farm payrolls, very particular, stay away from that one when scalping. A lot of people get stuck, kind of stuck in that. Other bits, things like GDP, interest rate decisions, you really will want to stick away from them when scalping, because they will take out your stop losses due to the fact that the market moves incredibly speedily. A few people asking about when will this recording be on YouTube? Probably next 24 to 48 hours. Good question about targeting pips on London Open. So when you're targeting pips on London Open, again, go to your larger time frames. If we were taking a look at that pound again, and we were looking at this particular trade here, of course, we would then need to use the larger time frame to work out where our next support resistance zone was. So our complete support was down here, and our first level of kind of problems was always going to be somewhere around here, because we can see that the previous market found an issue here. So when you're scalping, use the larger timeframes to work out where the take profit might be, and use the breaks to actually get you in. So yeah, that's what I would do. We also have a question.
Will there be a webinar on swing trading? Yes, there will. We have done a couple of them, so you'll be able to watch a couple of replays that we have done. But we can certainly schedule one of those, because I know a lot of people are looking at potentially combining the two, because we do recommend, like we said earlier in the evening, doing both, like having a supplementary and a primary strategy for when you are trading. So swing trading is definitely a very good primary strategy, and having your scalp as your supplementary. So we'll look at doing that moving forward as well.
The YouTube channel that you can visit is just Pepperstone's one, guys. So if you haven't subbed to Pepperstone's one, definitely check that out, because our ones get posted up there.
Yeah, and I'm pretty sure that you get an alert. If you are subscribed to the Pepperstone channel, I'm pretty sure you get an alert when a new one comes up. I'm almost certain of it. So yeah, if you subscribe up, you'll get you will get an alert. Yep. So you'll know when they are up.
A few people are just asking about the strategy and how we find it. So yeah, look, tonight we obviously went quickly. Again, if you take anything out tonight, look at the market half an hour before London Open, start to learn how it plays and how it moves, and start to look for support resistances and breaks of those zones. That's definitely something I would take out. Build that into your scalping system. It's quite good. All right, well, look, we've got so many questions out there. There's actually huge amounts coming through. We will probably leave the room open for another 2 minutes while we try to answer a few of them via text. But if we don't get to yours, sorry about that. We hope to, of course, see you potentially tomorrow night, but we look forward to also seeing you probably in 2 weeks. So join us next time, and if you have a question, ask it again, and we'll try to get to it, guys. All right, well, thank you very much.
I just posted our link again for anybody who does want to join us tomorrow night for the live market analysis. I'll put the link in the window again, so you can just click on that and register. It's free, and we go into a bit more depth on what the markets are doing. So yeah, hopefully everybody's enjoyed tonight's scalping. I definitely think we're going to do a part 2 on it, because I think it's look, another night will give us another set of opportunities to actually really show you how scalping works and how you can use it in the live markets, like in the here and the now. So we'll certainly schedule one of those, and yeah, we'll put together some of your ideas that you put through on your feedback on how we can make the next few webinars more tailored to yourselves.
Yeah, we do love feedback, so please do provide it. That's great. One last one, which pairs? Stick to the majors. Majors are great. What we mean by majors, these kind of ones that are highlighted up here, US dollar Swiss, pound US dollar, euro US dollar, a lot of US dollar pairs. And then you can also potentially use things like euro pound in London Open, and then also some of the yen crosses like euro yen and maybe even the beast pound yen. Though this one will move quickly on you. It's called the beast for a reason. All right. Okay. Well, thanks very much, guys. We'll see you in 2 weeks or tomorrow.
Thanks, guys. Have a good night.
Thanks very much.